The word on the street is that Bitcoin is going to $1 million by the 15th of June, 2023. That leaves us with just under 90 days to go. Let me know in the comments below, do you think that this is fact or fiction? What do you think is going to happen? If you have a look at the crypto bubbles chart over here, at least some of the altcoins are calling the bluff and they seem to be front running Bitcoin on this. Let me know in the comments, what do you think? Neil Jacobs says it over here. What do you think the chances are that Bitcoin goes to $1 million in the next 90 days? You can see the one that I clicked over here. It seems like 66.4% believe there's no chance. 1 to 10% say there's a 17.2% chance, or 17.2% of them say it's a 1 to 10% chance. 9.3 say more than 10% chance, and then 7.1 want to see the results. So basically, in a nutshell, most people don't believe it. They don't think it's going to happen, but could you imagine if it did? Well, firstly, I think the world would be in a pretty terrible place if that were to take place. But that's not what this show is about. We more about the different price levels that we need to look at for at least the shorter term and the medium term. And we just take it day by day, week by week, and we're not trying to think too far ahead. At the moment, if you have been watching the show, you'll be in long positions because we've been holding long positions pretty much for most of this year. So it's been a very, very good run, and all of my targets have been met. But yeah, where does this come from? Where does this $1 million target come from? Well, it's from Balaji. Balaji over there says Bitcoin is not for making money. Bitcoin is for saving money. It's not for an inflation hedge. It is a hyperinflation hedge. The world once ran on gold. It will soon run once again on digital gold. And basically, he seems to think that the US is going to enter into hyperinflation within the next 90 days. And we actually outlined this briefly when he first made the statement on Friday. And I said, well, we'll need to do a little bit of digging into what his true beliefs are around this, and whether he really thinks that is going to happen or not. So if you look at 𝗍𝗍𝗄, he says why it's different this time as opposed to COVID, based on the money printing and everything that's going on with the Fed. They due to essentially inject around $4.3 trillion into the economy, which is absolutely enormous. It's an enormous amount of money. And he says over here, during the COVID crisis, did Bitcoin have its moment? Not really. It nuked harder than anything instead of acting as a safe haven. And then it traded like a junk risk stock on steroids, mooning at the same time as Dogecoin and the monkey JPEGs. During the Russia-Ukraine invasion, did Bitcoin have its moment? Not really. Interest rates shot through the roof, and Bitcoin once again traded like a junk risk asset, dropping 65% over the year. This is the only time over the past few years where we've had a clean price narrative coalition. The market signal is clear and undeniable, with Bitcoin decoupling from all other assets, even outperforming its own riskier crypto counterparts. Bitcoin is seemingly, for the first time, working as a safe haven asset in response to the traditional banking system and in response to a globally unreliable and jerky central bank monetary policy. Now, what's interesting, if I may just say, is that, I mean, we identified this a long time ago that we're probably going to hit this 28K target. For those of you who have been watching for the show for a very long period of time, you know that's been the primary target pretty much since December. And here we are, we've hit it. And do you remember when I said to you guys, look, trust me, it's worth buying the dip. It's worth buying while prices are low now, because ultimately we're going to have, whether it's a relief rally and a bearish retest up to that 30K level, or whether it's the start of a new run. I mean, ultimately, I think that we're going to get to that level. And do you remember I said to you, rather get in now, because you don't want to have to be faced with making that decision when you get there. So let me know in the comments, did you follow that advice or not? I see that most of you are present over here. We have John, Claudia, Melvin, Tabu, JB, Rebel. Let me know if you are present in the comments. Also hit the like button to get this video out there. It does help with the engagement and the algorithm. So that's kind of where the price is at now at this 28K level. I'm going to get into the actual charting analysis in a moment. But first, I wanted to dive a little bit deeper into this whole Balaji statement. Now, I'll quickly give you my summarized thoughts on this. Okay, I think that it's unlikely that Bitcoin is going to $1 million. Actually, if anything, I hope it doesn't. I don't want Bitcoin to be at $1 million by the 15th of June, because if it is, we are going to be in an absolute crisis. I think you're better off buying guns, bullets, and canned food, non-perishable foods. If Bitcoin is going to go to $1 million, we're going to have much, much, much bigger problems. So what is going on over here? I think ultimately he's running a major marketing campaign for Bitcoin, and he does think that pretty much you should be moving your money into that to take authority and control of your own funds, as opposed to leaving it in the control of the central bankers. He basically has summarized and said that the central bankers, as well as the normal banks, the domestic banks as well, have essentially known that they lack liquidity. He's known that they've known for a long time, since for over a year actually, that they're going to go down, and basically at the end of the day, they're going to devalue the dollar to extreme levels, and consequently, you need to go into hard assets. He did mention property, Bitcoin, and gold. Those are the three. But he says, yeah, they're trying to block the exits. The US establishment just killed Signature and Silvergate because they banked crypto. Barney Frank noted that Signature wasn't even insolvent. Remember, we covered that. Signature Bank weren't insolvent, yet they closed them down. They won't even let Signature acquirers keep the crypto business. So basically, whoever purchases Signature, they're not allowed to have a crypto division, which is absolutely insane. And then he says, fortunately, there are enough pro-crypto banks elsewhere in the world that the US establishment can no longer take down crypto on its own. But Americans might be penned in. Remember Red Wedding from the Game of Thrones. I didn't watch Game of Thrones, full disclosure, but I know what happened in that scene. He says, yeah, first they close the doors, then they get everyone inside. This is what all economically bankrupt regimes do. They build Berlin walls that prevent freedom to exit, unless you can get out first. So he's saying, if you're in the US, and this is not financial advice, I'm not a financial advisor, I'm simply just sharing Balaji's take. He's saying that pretty much you need to run for the exits, and the exit is Bitcoin. Bitcoin is the best exit that you can go for. So very, very interesting over here. He says Bitcoin is the lifeboat. It's the Fed that crashed the ship because they knew that the banks were insolvent. And here he gives all the resources. You're welcome to go and click into those, and you can look at those archives. They hid this information in the footnotes, basically with complex jargon that would confuse the average or normal person that looks at economic data. They wouldn't understand what these terms mean. But through these terminologies, they basically knew that they're insolvent, and they knew a mega crisis and crash is coming. And he says, since they'd caused the banks to be insolvent, now they're trying a stealth devaluation of the dollar to stick innocent Americans and dollar holders worldwide with the bill. So if you trust US banking and media, stay in dollars. If not, get to Bitcoin. So look, this is my take. This is the way that I at least run my life and my investments, my trades, everything. What I typically do, I mostly just focus on Bitcoin and the US dollar. If Bitcoin is in an uptrend against the US dollar, I'm in Bitcoin. If Bitcoin's in a downtrend against the US dollar, I'm holding dollars, USD, or stable coins. So I really try and keep it very simple. At the moment, of course, Bitcoin is in an uptrend, and therefore you'd want to participate in that uptrend, of course. So he says, yeah, if you look at this graph, this is the gold price in Weymouth marks, and then the percentage change in gold price monthly over time. So from 1914, he says, imagine this graph, but in fast forward. That's what happened. That's what happens when people exit a failing fiat currency and enter gold. In this case, they'll exit the dollar and enter digital gold. The bet isn't a way to make money. It's a way to alert innocent dollar holders to get to Bitcoin. So I listened to a whole, Spaces. I listened to a whole Spaces from him over the course of the weekend. And basically, he did say that at the end of it, it is more of a marketing push for him. It's more an awareness campaign. And I don't think he actually believes that it's going to go to $1 million. That's not what he believes, although he did put $1 million bet on the line. And I think that is the easiest bet in the world. The odds are 40-1 that pretty much you're going to win if you take that bet. And it's so easy. Pretty much all you need to do is buy Bitcoin. And if he's right, you would have to give him 1 Bitcoin at the end of it, at which time when he made the $1 million bet, you could have just bought 1 Bitcoin for $26,000, and basically you would be losing $26,000. If it doesn't hit it within 90 days, he's going to give you 1 million. So, I mean, I wish that he would take me on that bet. I didn't even respond because I know everybody that's pretty smart would have challenged him on that bet, and he wouldn't be able to take that bet with everybody who asked for it. But in all seriousness, Bitcoin is very, very, very scarce. And Invest Answer says it very well here. He says plenty to go around. Take your time with Bitcoin. And here you essentially have everything. Remember, there's 5 million Bitcoin which have been lost, right? Completely lost Bitcoin. You have 21 million is going to be the total supply by the year 2140, I think, is the last Bitcoin that should be mined. That's the last block to be mined. So basically, based off the Bitcoin that's already been mined, there's 1.7 million that are left to be mined. Based on what's available on the open market, so there's 1.9 million is the balance on exchanges. So if everybody had a run and start to buy Bitcoin right now, there's only 1.9 million Bitcoin that is actually available to go around that's listed on exchanges. And then the big thing that you have to consider is, of those exchanges, how many of them actually have proof of those funds? I know we went through the whole exchange runs and all of that earlier on, was it later at the end of last year? And basically you need to consider that, right? Do they even have that 1.9 million that's available to purchase on exchanges, or is it less? Either way, even if it is the upper limit at 1.9 million balance to purchase of Bitcoin, that is not a lot of Bitcoin. If all those Bitcoin had to be purchased right now, the Bitcoin price immediately overnight would shoot to a price point of $500,000 straight away, immediately. So keep that in mind. You've heard the saying 21 million Bitcoin, and there's much more than 21 million millionaires in the world. So Bitcoin is precious, and I do think that at least it should form part of your portfolio over there. So here you have it. This is the bet, the Bellagio Casino, 1 million by June. Just obviously a funny meme over there. But let me know in the comments, what do you think is going to happen? Do you think the marketing campaign has enough momentum to at least push prices realistically to, let's say, around 40K? Is that a possibility? Is it in the realm of possibilities? Well, we'll cover the charts after this tweet over here, because I do think that it is something that could potentially take place. And one great bit of news over here is that it has officially been confirmed. So if you read this over here, I don't read Mandarin, but it has been translated, that starting from June the 1st, Hong Kong will officially allow all retail investors to invest in large cap cryptocurrencies. Cryptocurrency investing will become fully legal for all Hong Kong citizens. This is absolutely enormous news. Enormous news. This is huge, because Hong Kong obviously is going to participate in purchasing major large cap coins, and consequently that means low caps. You know the flow of money, Bitcoin into large caps, into mid caps, into low caps. It definitely is painting the picture that there's momentum behind this, and prices could get moving. So price wise, what are we looking at? Very strong monthly candle over here. The next area of interest is the 20 MA on the monthly chart. The 20 MA is currently moving down, but if it were to get there, let's say hypothetically this month, of which, by the way, I don't want to see that. That would be too much of a big move, and it means that prices will most likely absolutely nuke after that. But let's just say hypothetically, if it were to get there this month, that 20 MA is coming in at $33,115. And you'll see this number, this 28 to 34K level is a strong area of interest. You'll see it come up a lot. It was big volume and a big candle move over there by the Bitcoin archive. He says here that Bitcoin is about to close a monster week. So we had that strong weekly close, very good weekly close, biggest dollar gain since October 2021 and biggest percentage gain since December 2020. So there you have it. You can look at that. The last time we had 26%, and then the biggest candle that we had was 6,835. Now we had 5,777. Or excuse me, that one was 5,777, and then a 25.9% upside move. And what I find interesting is if you look over here at the Bitcoin volatility divided by the VIX, this has always been indicative of how high or low the volatility actually is in relation to the S&P 500, and it's still pretty low. So after a big move like that, it's basically showing that there is still room for a lot in the tank. There's a lot of juice left in the tank, and prices could seriously get moving. Now I messed up that. Let's just remove that. I don't even know why that alert is there. Take it off. Okay, look over here at the bottom. This is still pretty contracted, right? It's contracted in the same levels that we saw all the other major moves that took place previous times. What were the other major moves? Well, the other major moves were when Bitcoin went from 6,500 to 3,200. So basically a 50% haircut. It's also the same as when it went from 9,000 to 13,200, same levels. And then from 13,200 all the way to the all-time highs for a behemoth move. And here you have the same thing. major contraction over here on the volatility indicator, super low volatility, and you want to play volatility in line with the trend. Which way is the trend? Right now, the trend is up. We've tagged the upper Bollinger Band. Look at that. What a beautiful move if you trade Bollinger Bands. You went from the low Bollinger Band level to the upper Bollinger Band level, into the middle Bollinger Band, straight back to the upper Bollinger Band. As a trader, that creates immense opportunity for you trading a range. Bollinger Bands, almost you can think of them as a different way of creating ranges, right? Upper Bollinger Band, range high, middle, mid-range, and low Bollinger Band is the range low. So very interesting over there. Now, we have some big economic data events that are coming up this week, and it is going to be a huge week, right? I know every FOMC meeting is the most important one that we've ever had, but this one really is important because now we have things that are breaking, and this will be the first FOMC meeting that we have since things have broken. So it's going to be very interesting to see what they do with the interest rate raise. So you have existing home sales coming up on Tuesday, Fed rate decision on Wednesday, of course, huge. That's a big one. Jobless claims are going to be on Thursday, new home sales on Thursday, durable goods orders on Friday, services PMI, that's a very important one on Friday, and then also manufacturing PMI, another very important one on Friday. So Wednesday and Friday are the most important days. Basically, I think that prices could rally up into those events, and then there's probably going to be a little bit of de-risking because people get very scared going into those events. And you can already see a bit of that de-risking taking place right now. So consider that when it comes to your trading. And keep it simple, guys. You buy support, sell resistance, right? Buy high, sell low. No, buy low, sell high. That's what you need to be doing. Keep that in mind. We already nailed it. We bought low, we bought support, and now we're coming up higher at resistance. So are you going to round trip your gains all the way back down or not? What are you going to do? Well, this is what I'm seeing chart-wise. This is what I'm seeing. Okay, this is the high time frame overview on the weekly, overlaid as well with the psychology of where the market could potentially be. Now, initially, I haven't redrawn anything on this since pretty much when we initially made this. I think it was back in August. We're looking at this downtrend line over here. Remember, the market moved through all these phases. Hope, optimism, belief, thrill, euphoria, had a massive complacency bounce, which is rare that it takes out the previous all-time high, but it did. Anxiety, denial, panic, and capitulation. Did we get capitulation? We're still getting it? I don't know. Like these things, that's why you need to see how they develop. I haven't seen that part yet, in my opinion, true capitulation. But you can also capitulate over time. And this bear market has been really long. Then you usually enter into depression phase, and then prices go higher. But I don't want to focus too much on the psychology part. What I want to mostly focus on right now is the ranges. I'm sure you can all see over here. I'm going to use a highlighter just to kind of give you an idea of the ranges, and then I'll zoom in so you can see it a bit clearer. But ultimately, we were looking at this as one potential range. So this is a range. Range 3 is what I labeled it, okay? This is another range. Range 2. As you can see, price is currently operating within range 2. And then we had the massive range, range 1, which is where the extremely premium phase happened. Remember, I said you want to think of the market as discount phases when you're looking at these ranges. You want to buy the discount phases, and you want to sell when the market is at a premium. So that's kind of how you want to think about it. Now let's zoom in. Where are we? Okay, these are key levels. Marked out all the key levels. These ranges are based off of those key levels. So we had a deviation out the range, big deviation. There's your deviation, came back into the range. Now we've had a massive move up. We're now operating back into range 2. So, right, you came up, you basically retested the range low of range 2. Big push up. Now this would be mid-range. Any pullbacks into that zone are opportunities to buy, in my opinion. 25,300 is the level that I have here. Otherwise, you're targeting all the way back to the top. If it gets this high, remember I said you're going to see that 28 to 32K level come up often. Where does that come in? That comes in at 31,000. Let's just quickly mark it off, 31,500. So around that 32,000 level. So that would be the range high. If price gets it, especially if it happens this week, I will definitely be taking profits into the zone because I would expect at least a small deviation and to come back down towards the mid-range before moving up higher. So try and think of it like that. Look, we'll narrow down the levels more precisely in the other charts. This is just to give you a high time frame overview so you can kind of get a picture of what's gone on over here, right? Big move up, range 1, came into range 2, dipped into range 3. The ultimate low level, if it was going to be a capitulation that I was looking at, was all the way down at 8,400. Would have been extreme capitulation. You would have probably had less than 10 minutes to buy that dip. And I think price would have bounced off of this and reclaimed back into range 3 and then potentially reclaimed range 2 later on. That hasn't happened. I also want to caution you and say to you that for a long time, we outlined this as a possibility. I said to you guys that there is a real possibility. There's always a possibility that this could happen, right? That you can have price come down. Everyone's calling for 10K, then deviation. And this is where I said this might happen next. Once we reclaim this level, I said you could see price push up aggressively, maybe even go as high as 35K, maybe around here, and then still get slammed back down to finish off that depression phase, right? That is still a possibility. So you need to be cognizant of that. I'm not saying it's going to happen and I'm not betting on it. We take it level to level. At the moment, I'm continuing to hold my longs and risk is towards the upside in the higher time frame. Okay, risk is towards the upside. So keep an eye out on that, but don't be surprised if you see price start to lose those levels and get slammed back down. That could be something that will play out in the future. Okay. Looking at the Wyckoff accumulation phases over here, as well as the falling wedge, this was always the level. I did this show on the 27th of December. You're welcome to go back, look back at it. This was the exact level that I was looking at as a final target. And that was based off this, right? This is your order block, which led to the major breakdown. That is a big supply zone. What is supply zone? Well, demand zone would be where demand kicks in and price obviously goes up. Supply zone would be where sellers come into the market. Remember, this is MicroStrategy's average dollar cost average price is at 30K. That's where they got the majority of their bids in. So they're extremely underwater. So don't be surprised if they take some off the table when it gets back into that level. And where's that level? 29 to 32K. That's the level. So look, I haven't redrawn this since December. I haven't redrawn this. This is exactly what we're looking at. Falling wedge. We broke out over here. We came back. And then I was expecting a strong, aggressive move straight to 30K. And that's why I didn't sell this. For those of you who have been watching, you'll remember I didn't sell this. I said I didn't sell it because it was too clean, right? We had, obviously here, this is going to be range high, range high, range high. I expected that we're going to deviate first and then come back down in the same way that we had this. We didn't get the deviation. Instead, we had this pullback, which caught me by surprise, but then we loaded up here with the rest of our spot positions and the rest is history, right? Now prices come up, but now it's still something that could potentially happen. What you want to do is now you want to pay a lot of attention to see what happens when we start to approach this box. When we get into this box over here, you want to look for distribution signs, right? So if it starts to come in here and then you get like an over-under distribution, that's it. You got to get out of your positions because this could all be a massive deviation back into the broader range and we could stay there for prolonged periods of time. So there's a lot of hype and excitement now. Balaji said it's going to $1 million and you don't want to miss out. I understand. You don't want to miss out. But let's just take it level to level, focus on resistance and support, and that's it. What is this? Resistance. Okay, cool. You can see how far are we from resistance. Are you going to long here? You want to long into resistance? Cool. You're going to get 4% move on Bitcoin. Maybe at the max, you're going to get like about a 13, 14%. Is that worth it if you've missed this whole move? Is that worth you going in right now? I don't think so. I think just chill out a little bit. Cool. Here we have it. Strong, very, 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 very strong weekly close. Now, next levels to pay attention to. Okay, liquidity sweeps. We played liquidity to liquidity, right? This is one area that I'm looking at. So that is coming in at 32,375. Once again, those numbers keep coming up. 32,375. Based on the strong weekly candle, I wouldn't be surprised. I'm not going to say I'm expecting it. We need to take each day as it comes, but I wouldn't be surprised to see this week push straight up like that, capture that liquidity, and then maybe then we start to pull back and come down. Either way, for those of you who have missed out, I'm sure there's a lot of you because I understand, you know, it's emotionally challenging to buy these lower prices down here when it looks like everything's going to 10K. So you've missed the dip. What now? Let's zoom in over here. Guys, please give the video a like. Josh here is complaining to me again. He's saying, come on, this is the likes, hit the likes. He literally gets paid based on how many likes the video gets. So it's not me, it's him. He's the one that's asking for it. Okay, the weekly chart over here, strong weekly close. Now, main areas of interest, we closed above the 200-week moving average. The 200-week moving average is this orange one over here. Basically, any back test that comes into that level, you want to buy. That's a buying opportunity. So if price comes back down, currently, if it's this week, it comes to 25,500, you got to buy that. That is a buying opportunity. I would not be surprised if it did come down over here like that it would very quickly just bounce straight back up and you would have the candle close much, much higher. And this would all just be a wick that's left behind. So that's probably where you want to consider laying some of your bids. So what do you do now? Well, you've missed the boat. What I would say is you want to lay a grid strategy. Go on to BitGet. BitGet have probably the best grid strategies in my opinion. The other exchanges also offer it. There's a link in the description below. If you do use my sign up link, it not only helps me, but it also gives you up to an $8,000 sign up bonus. So click that link. What you would probably want to do is you want to scatter your orders. I would say pretty much between 26K, and you probably want to scatter those in case there's a deeper dip that comes down and maybe you reclaim like that. Probably I would go, man, let me just go back there. 26K to about 23,000 is the levels that I'd be looking at. 26 to 23.7. So within this area, set up the grid strategy with spot buys, or you can even go with low leverage buys over there. And if price comes down into there, expect that demand's going to kick in very quickly. And then the inverse is true. You also want to set, if you're holding positions and you want to get out of those positions into this resistance, because remember, these moves can happen very quickly, right? Price can move up into that 32K zone and it might only stay there for about 5 or 10 minutes and then immediately start distributing. So in order to get out of the position, but not to bulk sell everything in one go, you can consider taking some of your spot positions and setting grid sell orders between, I would say, I would go between 30K and about 34K. That's the area that I'm going to be looking to capitalize on and sell. Okay, update on the strategy thing that we're going through, where basically I've outlined everything in the tweet thread. So here, sold all my USDC for Bitcoin on that wick over there. And I said, yeah, 50% was entered at 21,500 based on this entry that happened over here. There we go, on this one over here. I am now 100% entered into the market, except for my dollar cost averaging. My dollar cost averaging 25% happens over an 18-month period. Other than that, I am pretty much fully in the market at the moment. Bear in mind, I didn't enter fully over here. As you can see, I entered fully on the wick. So, okay, the Gaussian channel. I told you next target is the middle band of the Gaussian channel. Look at how beautifully the strategy can work. I mean, you can't even make this up. You think that I can edit this in. It literally hits, let's zoom in for you even more, exact into the middle of that Gaussian channel. Absolutely unbelievable. So strong weekly close. Now you want to see how the next week opens up. Look, can have a little bit of a pullback. I'd like to see consolidation around here, but ultimately what you want to do is you want to now focus on the topper band of the Gaussian channel. That's coming in at 33,787. And when I said now that you'd be looking at profit taking into those zones, that doesn't mean that you're out of your investments, right? You would just be profit taking around here so that when it comes back down, you can re-add and then basically bring your cost average down, lower your average entry price. So everything is looking absolutely fantastic over here. It's looking powerful and super strong. You also have this over here. I told you the white line was our breakout level. I said to you last week, if you're an extremely conservative individual and you want to play it safe, yes, you're going to get in at a higher price, but you want to play it safe. You want to see a 4-day close above the breakout level. Of course, we got that, right? Now, to confirm the move, you technically need to see another close above this candle. So I don't trade this way because I don't know, it's too laggy for me, but a lot of investors could still run a very successful strategy if you did follow this way. And so ultimately looking for now a close above that. As long as this next candle closes above the previous candle on the 4-day chart, you have the EM or the moving averages, which are postured absolutely beautifully. The short is above the medium, which is above the long term. That is giving you a full-on long signal. All systems go. You should be holding for a major, major swing move that could potentially play out over weeks to months. Next candle closes, you have confirmation, but you have to wait 1 day and 17 hours for that close. So couple more days. Interestingly enough, that's going to lead straight into those major economic events that are coming up. Okay, so here you have the S&P 500. It is still range bound. I'll quickly remind you, the range is this, the orange lines. It is still range bound over here, but it's holding above the mid range. You have higher low, and technically this is still holding as a higher low, but you probably don't want to see this hold here much longer. You want to see this start to move very, very quickly and then break out of this range successfully. And then basically that will add pressure up for Bitcoin. So that's what we're watching over there. I don't have too much to report on the S&P 500 because most of the action is, of course, in crypto. So let's just focus on crypto for the time being. The dollar is still at a key level, but I would love to see the dollar start to break down over here. If Balaji's theory is correct, I don't want it to be correct to $1 million, but if it's correct, at least to send Bitcoin to all-time highs over the course of the next year or two, then it would be good to see the dollar start to just break down and just kind of consolidate and slowly move from liquidity to liquidity. The next level, if it does lose this zone over here, is going to be 101.297. But again, like I mentioned the last time when we had this big move, ultimately you're playing it level to level. And where's this now? So you had wick, and then a big move up. Rejection came back down. Technically, if you are trading the dollar, this is just level to level, right? Until it breaks out of that range. So you'd be expecting the dollar to start to move up. If the dollar moves up to this zone, expect a pullback for Bitcoin. A pullback for Bitcoin would be an absolutely phenomenal thing. It would be good. You don't want to move up too quick. I would like to see Bitcoin consolidate and cool off a little bit before prices move higher. Okay, guys, Josh just messaged me again. I wish I could screenshot this for you. He said, push likes. Please push like button. If you don't like it, push dislike twice. Cool. Next. Bitcoin dominance. Massive move. This is huge, guys. This is one of the biggest moves I've seen this quick for the Bitcoin dominance. It's just been level to level, reclaimed the mid-range, held the trend line, pushed straight up to the range high. Watch once it gets into this zone. This is where the action is going to happen, right? This is where you want to start. This is exactly what you want to do, right? This is going to happen soon. Let's quickly take that off. This is going to happen very soon, probably even today. Bitcoin dominance pushes into this zone over here as soon as it hits range high. What I want you to do, and I'll bring it up in tomorrow's show, it's probably going to be relevant for tomorrow. Then we want to go look at altcoins against Bitcoin, which are the altcoin BTC charts. So whatever it may be, ETH BTC, Link BTC, Uni BTC, etc., etc. Which of those charts are holding a strong base, holding a strong range, and slowly starting to establish an uptrend? Those are the ones we want to buy. Because when this Bitcoin dominance turns and starts to come down, those are the ones that are going to absolutely rocket. That's where you're going to make your real money, right? We know that for Bitcoin to go from here to $1 million in the next 90 days is very, very unlikely for such a mammoth move. But for altcoins to outperform Bitcoin when Bitcoin dominance is coming down is very possible. So you want to pay attention. We always do our business at the extremities. When any chart gets to the extremes, right? Then we do our business. These are the extremes. You are expecting a reaction off there. The same way we had this, reactions around here, the range low, expect a reaction around the range high. Okay, that means it's time to do business. Next, total 3. Total 3 is still stuck within a range. It is starting to slowly but surely establish an uptrend. Total 2 and 3 are still looking pretty dismal. Let's quickly zoom in over here. But like I said, that can change very, very soon. As soon as Bitcoin dominance falls off, this you can expect will follow this path. Total 2, which is all altcoins plus Ethereum, should shoot up. Total 3, let's see total 3. Here's total 3. Same thing. We're expecting something like this, a reclaim of that 395 billion level, push up, consolidate. So far, everything's following our plan. We came down, bounced off this level, expecting it to push up here, break this long-term downsloping trend line, the white one, break the top of the range over here, hold above, and then altcoins are going to start to go. Okay, liquidity did kick up in the US, as you can see, but we want to see more sustained liquidity flowing into the market. People's Bank of China has started to come down. The histogram is starting to fall down. So let's see if they can bring that liquidity back. And then this is a big one for me personally. I want to see the US stablecoin supply start to establish an uptrend again. We need red above orange, and for this to start to move into a healthy uptrend. So like that. Once we start to see that, then we know that we have proper momentum in the crypto market again. Okay, RENKO chart. RENKO chart made the swing high successfully. So this is all good. That means that any pullbacks that happen from here are once again buying opportunities. As you can see, the key level on the RENKO chart is coming in at 24,300. On the normal chart, that's going to be 25.5. That is really the region where you want to start to capitalize if prices do pull back into those zones. Okay, looking at the quotes moving averages, continuing to the upside. It is starting to get heated, but it can get more. I told you, I want to see the Fisher distance from EMA come into this 4 zone, around 4 to 450 would be a very, very strong sell for me. So if you are using this and you see this move up like that, and Bitcoin, I told you, Bitcoin goes into that 30 to 32K order block level that we showed you on the Wyckoff accumulation chart. Strong sell for me. I'll be offloading pretty much most of my positions, expecting a very strong pullback from that level, at which time I'll re-add all those positions back lower and then basically get more money, more Bitcoin. Okay, bear moon is coming up. You guys know, don't fade the moon. Never fade the moon. There's the moon, bull moon, boom. Bear moon is coming up. I think it's in 2 days. So let's go. Okay, 15. That's 15 bars. That means it is set to happen on, would you know, FOMC on Wednesday. So according to the moon cycle, the FOMC is probably not going to go according to plan, according to what we want to have happen. EMAs are still all up. So basically looking at all of these are areas of interest. When price does come back down again, you want to see it hold into these EMAs, and that would be opportunities to add to your positions over there. So in all seriousness, guys, why do the moon phases work? Well, I mean, humans are pretty emotional. We obviously mostly made out of water, right? I think, what are we, like 60 something or 70% water? And obviously the moon controls the tides, it controls water. That's basically why. I mean, look, I'm not an astrologist, but do your own research. I think that it's interesting. I don't necessarily trade it blindly, but it's interesting. Okay, let me know in the comments. do you guys look at this moon phase thing? I want to see in the comments. You look at the moons. Beta males are emotional. Yes, Charles. Stay away from those soy boys. Don't eat soy. Must eat liver. Okay. Mystic Hodler says I should stop. Okay, some of you guys listen to the moon. It made you very wealthy. They say that millionaires don't pay attention to the moon. Billionaires do. So I don't know. Okay, guys, let's move on over here. If you look at the super guppy indicator, which is essentially a conglomerate of different exponential moving averages, you can see that they're starting to spread aggressively now. This shows that a trending move is starting to take place, right? So yes, we did have it here, and then it came back down and created a fake out. But how many fake outs will you get in a row? I think that obviously it's like a crying wolf thing, right? So every time it's a fake out, it's like crying wolf. And then the next time the wolf really does come. In other words, the real run really does come, catching most people off guard because they're so used to deviation back into the range. And then when the real trend does come, it's too late. They've missed it. So be very, very careful with how you manage your positions, and don't take all of your money off the table. You don't want to take too much off the table. But if the deviations were to play true, this is one way that you can monitor it. So I did this on the bottom. So we knew this was the main range, right? How do we know this was the main range? You look at the stop and reversal points, right? Or the main sticky points. So there's 1, there's 2, there's another one. So we had that level marked out. How did you know this level? So there you had 1, 2, 3. So you could throw your range in. So where did something different start to take place? Now we're looking at what happened with this deviation here. So you knew something different was happening when obviously price broke down. Okay. bounce back up, next candle open, straight nuke to the downside. Once that happens and you get the next bounce, immediately I threw in a line. Boom. Potential range low is what I labeled it. I said potential range low. Okay. Next move came up. Bam. Rejection off of the previous range low, the blue line. Now you're like, oh shit, okay, it's rejected off that. That's looking really bad. That's why I would have said as well. I mean, at that time, I would have said, look, this is looking very, very nasty. And it looks like it is going down to that 10 to 12K level. Came back down. We had the potential range low drawn. Price came down, bounce. Mid-range, at that point, you can draw your mid-range because you have a range high, you have a range low. It means you can put in the mid-level. So rejection, rejection, rejection comes down. Would you know? Holds that level. Holds it. Comes up. Reclaims. Again, rejection. Look at the anatomy of that candle. Rejection candle to the downside. Comes down. Holds here. Starts to hold against the mid-range over there. And then slowly reclaims. So what you would then do is you would want to zoom in to get in, right? So as soon as you reclaim the range low support over here, or this range high being the yellow, range low from the previous range being the blue line. As soon as you reclaim that, you know that's your signal to enter. Now, some of you may look at me and say, well, look, that happened so quickly. How would you have got in? This is how you'd get in, right? This is why I say when prices reach the extremities, you want to zoom in. So you would then take your chart and you'd go onto, let's say, a 1 hour chart. And then let's go look at that on the 1 hour chart. Okay, here it is. So this is how you would have known. Zooming in on the 1 hour over here, you would have had a reclaim like this, holding, pushes up, strong move down. And then this around this region over here is where you would have tried to create your trade setup with your stops. Once you had this candle over here, that's probably where I would have entered. So I would have done something like this. I would have probably entered somewhere around here. And I would have put it underneath that wick over there. So yes, the next candle almost wicked you out, but based off the 1 hour candle and what that candle looked like, that would have created the opportunity. The only reason I'm showing you this, by the way, is because you know what to do now. Now, we're approaching the extremities again, right? So let's go back. Click over here. That is the point of what I'm showing you. I want to show you the extremities. Okay, here we have it. So now you're starting to approach these extremities. The difference between what happened down here is you don't really have any additional support levels that recently happened to work with. Whereas here you have recent resistance levels that you can work with. So if you have a look, you can start to mark those levels off. So what you want to do is grab our magnet. So there's one area of interest because we don't know where it's going to run into this. And then we have the top area of interest over there. So somewhere within here, you could potentially, let me just fix that. Somewhere within here, you could potentially see the same thing play out like this. So I don't know if it happens here. I don't know if it happens here, but this is why you want to zoom in and create a plan. Let's assume that price has been capped now on the top side. And you want to mark this off as your range. What do you do next? Well, next, firstly, you want to zoom in. So let's go into, let's say, the 4 hour chart. So you want to look at it like this. This is if you're a range trader. This is the point of me showing you this. Then you want to grab, again, your fib tool. And you want to mark it out. Let's just take that off. And then you want to mark off your mid-level. Now, what's interesting is, look, that mid-level acted as resistance, broke through, came back, support, support, support. So where do you have your confirmation that a potential deviation could be taking place? Well, if you start to break that back down below that mid-level, then you can say most likely this is going to be your new range high over here. Let's just grab that. This is going to be potentially the range high. This is going to be the range low. This is going to be the mid-range. So basically looking for price to operate within these levels. Okay, and then maybe you start to create a distributive pattern over here and then come back down. But we can reevaluate later. I'm just showing you how you can think ahead. Let me know in the comments. I don't know, does that help? I hope I didn't talk the ear off a donkey over there. I hope that that made sense to you. I see that Rob G says, What's Hex? Hex has really been making the rounds lately. Hex is supposedly better than Bitcoin. At least that's what I've been told. Now the Hex community is probably going to screenshot that and circulate it. Okay, guys, in all seriousness, let's move on. The question is, where do we cap over here? That's the only question. So somewhere within here, you're probably going to develop a range in the same way that you have, let me just bring that back up. In the same way that you have this range on the bottom, somewhere here, you're going to get a similar range that might distribute back into the main range, being the blue zone. Okay, next, let's look at this one over here. This is what you're looking at on this chart over here, where we had the diagonal, the parallel channel match with the range high. We did successfully break out above that. Look, no comment over here. Let's just see how this unfolds. I don't really have too much to say. I think I've covered enough in the other things over there. Okay, I wanted to look though at the volatility on the daily. You can see it is reaching those extreme levels. Red bands are starting to print over here. Prices pushing up very, very aggressively, showing you that the move is getting overheated. So same thing as what I just said. You want to start to potentially look for those ranges that might potentially form. Therefore, price consolidates, sticks within a range, and then you can reevaluate. Is it going to be distribution, or is it just reaccumulation within a range that's going to lead into, let's call it into a bull flag, right? Because what does a bull flag look like? A bull flag is essentially if you see a pole, consolidate, pushes up a pole, and then you consolidate, that's when you're in that range. And then you have another accumulation phase where it comes up, and then maybe that's your last one, and then you distribute. So that's what I'm looking at, guys. I don't know. I hope that helps. That's basically a high-level overview. Let me know in the comments what you think, if that makes sense to you. I think we've been extremely profitable. I honestly don't think that I could have played this any better than I have. It's been really perfect when I look back in hindsight. There's nothing that I would change with the way that I've traded this. So let's hope we can continue that strong run. Make sure you give the video a like, hit the bell notification, and subscribe to the channel. And I think that's it from me, guys. That is it from me. I will see you all on the next video, which is going to be tomorrow, Tuesday. Have a safe and stellar day out there. I appreciate each and every one of you. Cheers for now.